Thank you very much to the Ashika Group for having us over here and for hosting this evening. It's a great privilege. Let me start by asking you this. It's been almost 4 years. Government has been in power. Came with a lot of promise and obviously a lot of legacy issues as well. We've gone through our own motions. Now the RBI tells us that we're probably looking at 7.4% growth for the current financial year. Does it feel like 7.4% to you? Does this feel like Achhe Din? Where do you think we are?
Difficult to know. I don't know what 7.4 is supposed to feel like. But the economy is definitely growing very fast, and there's no doubt that it is now the fastest growing economy of any size in the world. And that is definitely true. It's not just our opinion. This is something, as you said, the RBI put together, and we very often don't agree on things, but at least in this one we do. But also the IMF and all the indicators clearly show that we are growing very, very fast. And in fact, we went past France last year, and now we have gone past the UK, and we are now the 5th largest economy in the world in US dollar terms.
Let me play devil's advocate, because that's what we do here in the media, right? So the numbers look good, 7%. And even if you're looking at corporate earnings, things seem to be picking up. Whether you're looking at auto sales or you're looking at indicators like aviation, just the number of people flying, those numbers are looking good. But at the same time, the private sector participation that we're waiting for, CAPEX, if you look at, for instance, CMI's numbers, and they talk about how in the first quarter of this year, new investment or new project launches are down by 22%. And CAPEX, private sector CAPEX, is not showing signs of revival.
I think there are more than adequate signs that CAPEX cycle is picking up, not just anecdotally, but we can see the credit growth is back in well into double digits. We can see capital goods production is up. But most importantly, irrespective of what is happening already, the fact of the matter is every indicator suggests that capacity utilization is dramatically going up. So if capacity utilization is going up, that is almost always universally around the world a sign that capacity creation will now begin to pick up. Our problem really is to make sure there's enough capital available for doing this, because we do have a problem with our banking system, which we are cleaning up, and it's still in process. So the problem is not with people wanting to add capacity. The problem now is, can our financial system deliver it?
Before I talk about the big elephant in the room, and that's what's happening to our banks, let's start with the biggest bank of them all, the central bank. As you mentioned, bank credit is just beginning to pick up. I think numbers are just under, 11%, the last printed numbers that we got, the monthly numbers. At a time like this, now obviously the RBI has chosen to go ahead and hike rates. Could that act as some kind of a bit of a speed breaker? Or can the economy withstand the 2 rate hikes?
It's obviously it's a system that feeds back and forth. If things slow down, they'll also cut. So it's not like it's a one-way flow. As far as the latest reading of the RBI, which just came out 3 or 4 days ago, this is what they expect, which is that the economy this year will grow, this financial year will grow somewhere around about the 7.3 to 7.5 range. I would count that those very, very good numbers, because frankly, we not only are going to see high growth, but for once, it has nothing to do with pump priming in any way. Our fiscal side is very well contained. As you know, we have kept it very tight for several years now. And on our monetary side, we in fact, we have argued often whether it's too tight, and they have tightened it a little bit more. So it is not the case that we are getting growth because we have gone out there irresponsibly expanding either on the fiscal or the monetary side. It is the case that things have been kept very tight, and we are still generating this kind of growth. So it is very high quality growth. And this is happening at a time where we have also simultaneously carried out several painful reforms over the last 24 months, whether it is cleaning up of the banks, which had been a mess for quite some time, and everybody grumbled about it. But ultimately, we did begin to clean it up. We introduced GST, again, a reform that was debated since when I was at university. But after 20 years, finally, this government decided that let's do it. We now have an insolvency and bankruptcy process, which was entirely untested a year ago, but now we know it works. We've done some very major cases that have gone through it and have got liquidated and auctioned off. We have several very large cases that are just about very close to getting finalized. So even there, we are seeing some very big structural changes that have been done to this economy.
Let me start with the first issue, the one that you initially touched upon, where our banks today stand. Again, going back to RBI's numbers, I think total stress in the system right now is somewhere around 11.6% of outstanding loans, may go up to about 12% odd next year. That's, again, RBI's projections. A lot of things have happened. The IBC, for instance, the RBI itself doing away with the old schemes like CDR and S4A and all of those other acronyms, putting in place a far more sort of stringent circular on the 12th of February. And then we've heard of Sashakt in the last couple of months from the government side. All this effort, but where are we in terms of actually moving to the goalpost and actually getting to the finish line of getting the stress fully recognized and then start the repairing process?
So this problem with our banks is a very old one. What was the problem? One was politically directed lending of various kinds. Two, that whenever things went wrong, we didn't have a process of liquefying and getting rid of the mistakes. We had this old problem, and it got exacerbated in the period from 2008 to 2013 when there was this lending boom. And so we had this very big problem by 2013. Now, the original idea was that we create a bad bank, shift all of these bad assets there, recapitalize the banks as the counterpart on the other side of the balance sheet, and they go back to lending, and these bad assets go into the bad bank. Now, the reason we didn't go down that path is the following. If we had done that, what would have happened is that we would have ended up with a warehouse like BIFR. And many of these assets would have just festered there forever. There would have been no culture change. That same evergreening we would have gone back to doing, and there would have been no recognition.
Would you say that all the bad blood is out?
More or less, yes. The second thing that we achieved is that we created a system through which we could take these bad assets and liquidate them and put them back to use. After all, what's the point of having these things, dead assets, lying in a BIFR type warehouse? We have created a process that however, either you resolve it or you liquidate it or you auction it, whatever it is, these assets are now brought back into the system. I'm glad to say that a year later, many of these have now come to fruition. Some of 4 of these 12 cases have actually gotten done. Many of the others will get done very, very shortly. And just from these 12 cases, I think somewhere in the range of about 1.2 lakh crores will be recovered, just from these 12 cases. So this is a huge success. And it not just in terms of getting recovery back, it has now put these assets back in the market, but very, very importantly, it has fundamentally changed business culture in this country.
I take that point. However, some questions for you. A lot of people will argue that the first NCLT list, the first 12 accounts, as you're saying, they also had some of the best assets, some of the most marquee names, some great steel plants, and therefore there was value. There's been good recovery for banks as well. A lot of people want to now see what happens to the next, because that's where the assets might not be as interesting for buyers. Haircuts might be much, much bigger. And that brings me to the concept of Sashakt. One kind of is at loss to understand how it is different from earlier frameworks, and particularly for loans which are above 500 crores, where the concept of an asset management company has been established. How is that going to work? Where are the buyers?
Firstly, you got to realize that this is not an attempt to go outside the IBC framework at all.
Sure.
The IBC framework is the ultimate framework. What we are doing is creating the wider ecosystem for this. The reason we have to do this is obviously we don't, and particularly with the February 12 circular, we're going to have many cases now being coming. And of course, as I said, a lot of these assets have now been recognized and written off. But we have to do something with them. And we don't want the NCLT to get jammed with every small little case that comes along. So what do we do? So hence this scheme. And there is a bunch of cases which are from the 50 to 500 level. Now, there more than one bank is likely to be involved. There also, we have made arrangements that the lead bank basically takes lead and gets on with it.
But wasn't something like this already existing under the JLF framework?
So the JLF is probably what is the nearest to this.
Okay.
So they have, yeah, you can say that we have taken some JLF type thing. and created it because after all, we got rid of those acronyms, which are all very confusing. So we have now created a clear process, and this is, you can think of it as the upstream of the NCLT process and creating the ecosystem. And we are creating processes, rules, etc. And the banks themselves, by and large, are going to run this. RBI will just create some broad guidelines. But the fact is, in the end, the law which really overrides all of this remains the Insolvency and Bankruptcy Code. Let it be absolutely clear. This is not an attempt in any way to bypass it.
Absolutely, I get that completely. But again, coming back to the large cases, 500 crores plus, now to prevent absolute, the ultimate liquidation happening, under the IBC purview, the idea is to try and get an asset manager of sorts instead of a bad bank. How will this AMC function? Who are going to be the potential investors? Because, I mean, asset reconstruction companies have been around, funds have been around, international funds have been around. What is it that will make them come in now and start taking interest in these
there are
assets?
obviously many asset reconstruction and companies of various kinds, globally and inside India. Edelweiss is there internally. We have, I think, Liberty House and various others. So there is a whole bunch of people who do this kind of thing, and they are interested.
Just to understand, one final question on the Sashak scheme. At any point in time in this AMC which is being envisaged, would the
There's not ANC, it's an ecosystem of AMC.
An ecosystem of AMCs.
An AMC would be the same old bank idea.
Would the government be thinking of putting in any money in this? Not at all.
No, not really.
Okay.
I mean, public sector banks may do it, they're government owned, but government is going to sit and try and figure out which company should go where? No, we don't have the capacity. We are basically here to create frameworks.